Welcome to FT Markets. The Danish central bank unexpectedly cut rates this week, just 1 week after its Swiss counterpart removed its ceiling against the euro. I'm joined now by Ferdinando Giugliano, who's going to tell me a little bit more about what's going on. So Ferdinando, tell me a little bit about the context to the euro and the krone. What is the relationship and what's it been like until now?
So the Danish central bank has a pretty peculiar monetary policy because its sole purpose is to keep the krone tightly pegged to the euro. And we can see it in the first chart. Basically, there is a peg around 7.4, 7.46 krona to the euro. There is a band plus or minus 2.25%. But as we see, the red line, which is the actual rate at which the krona trades against the euro, is really, really tightly close to the center of that band. So as we see, the relation is basically very close. And that's because the Danish central bank has decided to peg its currency against the euro since the beginning of the single currency when the euro was introduced. And in spite of a referendum where the Danes actually said no to joining the euro, the central bank still decided it was the best thing to do was to keep a close peg to the euro, and that's what's happening here.
So what's the logic behind the negative interest rates they've introduced?
Well, I think we can see in the second chart that it's clear that the Danes are worried about a possible inflow of capital from the eurozone because of what's happening this coming Thursday when the ECB is widely expected to announce a program of quantitative easing that will push down interest rates on euro-denominated assets, and that money will search for yields elsewhere. This could be Switzerland, it could be Denmark. So if you cut, in particular, the deposit rate, but also the lending rate, this should discourage lenders from keeping money into your country and possibly pushing them somewhere else. So that's what they're doing, and that's what the Swiss are also trying to do by cutting their own deposit rate below to minus 0.75.
So it's a question of competitive easing. But tell me, is the Danish central bank going to be strong enough to defend this position, given that it looks now that the markets are very much against the central banks?
Well, I think they're in a better position than the Swiss. And we can see that in the third chart, which shows foreign exchange reserves as a percentage of GDP. In Switzerland, that's the red line. And in Denmark, that's the blue line. So one of the problems the Swiss face, actually the main problem Swiss face, and the reason why they abandoned the ceiling was that foreign reserves were ballooning as a percentage of GDP. They were almost 80% of GDP. Now the Danes are at a much lower level. They're much closer to, say, the level of the US Federal Reserves in terms of balance sheet as a percentage of the GDP. So I think at the moment the situation is a lot more manageable. However, I mean, it really depends on the scale of the inflows. Generally, people believe that the Danes are in a better position than the Swiss also because Denmark is not a safe haven. It's not regarded as a safe haven in the same way as Switzerland. So even if Mario Draghi were to launch quantitative easing on Thursday, as many investors expect, I think with the amount of money which investors will bring to Denmark will probably be a fraction of what they will bring to Switzerland.
So it looks like zero may not be enough to fend off capital inflows in the eurozone anymore.
Indeed, we're seeing big experiments here. I mean, the Danish central bank was the first central bank to introduce negative deposit rate. That was in the middle of the eurozone crisis for a prolonged period of time. The Swedes had done it for a short while. But now we're seeing central banks pushing deposit rates lower and lower. The Swiss are now at minus 0.75%. That's a lot. And depending on the success of these experiments, then we may see other central banks going there. Remember, it's always the small central banks. It's often the small central banks which try these experiments first. So everyone must be watching what the Swiss have done with great interest.
Thank you, Ferdinando. So it looks like we're approaching an absolutely new negative interest rate regime. How much lower things go will all depend on what the ECB does this week.